828-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. Oh, happy Friday. 24th day of February, 2017. Everybody's been working for the weekend. You only had to work 4 days for this weekend, though, because Monday was a holiday. But lo and behold, here it is, staring you in the face. Now what are you going to do? I'm sure you'll figure something out. Hey, if you're brand new to the show, let me extend you a special welcome. If you are returning, welcome back. If you're one of the new folks and you can't see the chart I have up, it's a bit lackluster, but it's a chart nonetheless. It's the S&P 500. Here's what you do. Go to our homepage, which is where you might already be listening to the radio. On the right-hand side of the page, there's a big microphone. Click that. Follow the instructions. On the next page, you'll see Watch Live Now. Click that. 30-second registration, and you'll be able to see the charts and participate in the discussion via the chat box. Okay? Now, the good news is you only have to go through that registration process 1 calendar day per month. So, whether you do it on the first day of the month or the last day of the month, You got to do it one day every month. So you pick which is better, the first day or the last day. Because if you do it the last day, you got to turn right around and do it again on the first day. Get it? See how that works? Okay. So now you understand. And by this time, you can probably see the chart. We're coming up out of this zone at 2356/57. We've been there for the last 1, 2, 2.5, maybe 3 hours. Depends upon how you want to calculate it. But last few hours, we've just kind of been stuck here. Not a place we're unfamiliar with. Question is, on a Friday afternoon, with no news coming out, we draw a trend line across here, and I guess we got to go with that guy right there. Any close on that side of the trend line would potentially open the door for us to move up to the zone we failed to get to right here, which was 2369/2370. Although the market has created some obstacles along the way as it made its move back down to this zone. And those kinds of obstacles you have to be aware of are things like this, which pretty much line up with that. So that one's not too big a deal. But then you also have this, which could become an issue if you make a straight line out of it. Something a little more like we'll go Picasso. Yeah, that's straight. Okay. Alright. It's an optical illusion, but it's straight. Because the red line's straight. And so, see? Straight. And then, window of opportunity right on up to the top. So it's sort of a stair-step approach. Got to get over this level, and then you got to get your foot over that level, and then you ring the bell here. Now, that wasn't our highest weekly zone. It's been a rather quiet week. Imagine that. We thought the markets would just explode when President Trump was elected, but they didn't exactly explode. It's been more like they melted higher. Slow and steady. Slow and steady, which there's nothing wrong with that for intraday trading. There have been more than a few intraday opportunities. Michael took advantage of some pretty good intraday opportunities today in the live training room, and he'll talk to you about that in just a moment. But if we go all the way back to the beginning of the week, which was the low point of the week, we opened for trading Sunday night, then we had a Monday holiday, Monday afternoon, and then Monday night we were open again for the Tuesday session. And so this opening low on February 19th was 23.46.50. 23.46.50. Okay. Low of the week, no argument there. Now we scurry across the screen to find the high of the week, which would be this high right here, 23.67.50. 23, 67, 50. Now, without even breaking out a calculator, from 46 to 66 would be 20 points, 21 points. So we have a 21 point range on the week. $21 point weekly range. Now, and I used to do this a lot, I used to pull up a tool that comes with almost every trading platform. And let's see if we can find that baby. Average true range. Okay. Now we're on a 30-minute chart, so the chart will get ugly for a minute, but that's okay. We'll put it back. Go to a daily chart. And the default look back period is 14 days. Yeah. Yeah. But a trading week is only 5 days. So let's look back 5 days. So we got an average weekly range of 20 points. We've got an average daily range over this past week of 12.6. Now, the average daily range, not weekly, but the average daily range for many years in the S&P 500 was 20 points a day. That's from the low of the day to the high of the day. Not that we buy the low or sell the high. That's not my point. My point is simply that looked like kind of a, a little. You ever been in a hospital room and seen one of these, and then you get a jump and then it just goes back flat? Yeah. So that's what I wanted to show you. In case you don't know about the average true range tool, well, now you do. So we'll get rid of it. And we'll get rid of it. And we'll put this back on the 30-minute chart. And now it's all pretty again. Well, I wouldn't exactly call it pretty. So, high of the week, 2367.50. Low of the week, 2346.50. 21 point weekly range. Mike Reed's going to join us today, I believe. I haven't heard from him this morning, but I think he's going to join us today, and he's going to talk to us about something that the Dow hasn't done, I think, in 30 years. So we'll talk about that in a minute. Let's take a look real quick at the numbers around the world on this fine Friday, the 24th day of February, 2017. Now, here in the U.S., let me just prepare you. Everything's red. All right? You ready? The Dow is off 43 points. These are the cash markets. The NASDAQ is down 11. S&P 500 is down 4.5. And the Russell 2000 is down 4. In our commodity basket, crude oil is down 43 cents, trading at 54.02. And I will show you crude here in a moment. In fact, I'll show it to you now while it's on my mind. Alright, this is This Week in Crude. This Week in Crude, brought to you by the good folks at CFRN. February, well, actually, that was the open. So, we'll put our little yellow arrow there. And this line we'll just get rid of. See? So, we went from we opened just above this weekly zone and made it to this zone, rolled sideways, got up to this zone, back down to this zone, and then made it almost all the way back up to the zone. Missed it by just a couple ticks. Now, that's a bit of distance. From 54.30 to 54.90, that's 60 points. So we ran at $600 per contract. So we ran $600 per contract. Back down is $1,200 per contract. And then if we could have got all the way back up, that would have been $1,800 per contract, zone to zone to zone, in this short little area here. And I might as well throw in the 600 back down, which would have made it 24. So, but it is what it is. These are this week's weekly trading zones for crude. We do the zones every week for our partners, for the S&P, for the Dow, for the Russell, and for crude. And so we get back down to this 53.60-65 area, get back up to the zone overhead, do some consolidation, run up, get rejected, run up, get rejected again, pushed back down, and we almost made it back down to that 53.60-65 zone again. We got down to a low of 76. And then we caught a reversal. Now, this reversal, in my opinion, has to do with early buyers seizing an opportunity. Because look what happened the last time you were able to buy crude at this price. The last time you could buy crude at 53.75, right here, where my cursor is, 53.75, buyers were able to run that thing all the way up to 54.95. That's well over $1,000 per contract. Now that it's gotten back within this area, nobody wants to miss out on that joyride, and so people climb aboard early. Early buyers don't want to get left behind, don't want to get missed out, don't want to miss out. But they run into a mysterious obstacle called a weekly trading zone. But if you look left, you'll see that as price came down, bumped its head. This has now become good resistance. So the question at this point, and we only have a few hours left in this trading week, will we close the week closer to 54.20 or 53.65? It's going to be one of the two. Now, if you want to trade on a Friday afternoon, I would say be short below 53.90, or if price can actually get through this zone, then it's probably got some strength behind it, and you might be long above 54.35, even if only up to 54.50. That's a reasonable trade. All right. So let's come out of the commodities. Let's go back to the cash markets. We've already covered the U.S. Everything's still dripping red. Let's go to the Asian markets, where there's a wee bit of green. The Nikkei closed down 87 points. The Shanghai, there's your green, up 1.5 points. The Hang Seng, on the other hand, down 149 points on the session. And that's where it closed out for the week. Last but not least, you've probably got the hang of the color of the day. It is red. The FTSE closed down 27 points. The DAX down 143. And the CAC down 46. The DAX down 143. It's a big number for the DAX. That's almost 1.25%. The CAC being down 46, that's almost 1%. So, on this Friday, the 24th day of February, 2017, markets are awash in the color red, with the exception of the Shanghai, which is up 1.5 points. And I did not share with you the good news on gold while we were in the commodity basket. Gold is actually green as well, up $6.10, trading $12.57.50, half of 1%. So there you have it. There are the numbers from around the world. Looks like we end the week predominantly in the red, but then there's always next week. President Trump held a speech this morning, rallied the troops. He's now very busy with his executive signing pen, doing what he does best, sign executive orders. This one is on regulatory reform. What'll come of it, I don't know. This new executive order on immigration, no longer do we play catch and release, supposedly, is now we catch and send back. But some of the places don't want them back. And so that creates a bit of an issue. Mexico has a southern border problem as bad as we do. Not everyone that comes across the Mexico border into the United States is of Mexican descent. If you take a look at your wall map, there are some South American countries below Mexico. And now, if you think the ones that come across the desert from Mexico into the U.S. are thirsty, whoa, what about those people that made that trek from way down there? Yeah. Yes, it's true they could stop off for a cerveza on the way. But once you hit that patch of desert from Lukeville up to Phoenix, it's pretty slim pickings. You're lucky to get any cactus juice out there. I've driven that stretch so many times, and had the long gun shoved in my face so many times. Are you an American? Si, senor. Yeah, I'm an American. You want to see my driver's license? Go. Okay. He knows I'm a wise guy, and he's got better things to do. So, now, you can be bold coming back in once you get over the border, because once you get over the border, about 25, 30 miles, then you hit another checkpoint. This is where the coyotes pick up their guys that have climbed over the fence, and now they're driving them in. But you're already on American soil, and so you can be a little more bold with the whole thing. But when you're crossing the other way headed in, it's yes, sir, and no, sir, and please. They have big guns. So, anyway, let's go to Michael. We'll get a recap of everything that happened in the live training room today. And after that, take a look at a couple of these headlines. We'll talk to Mike Reed. He'll tell us about the Dow and this historical 30-year thing. And we'll go over the Concierge Trade Alerts. We'll hit our good word for the day. All the stuff we normally do each and every day right here on CFRN. All yours, Mike.
Thank you, sir. You should be looking at my spreadsheet now.
Yep. True story.
All right. Here we go. All right. Good afternoon, everyone. Today is Friday, the 24th day of 2017. If you have not taken a free trial with us, go to the homepage here at CFRN.net. Scroll down to where it says free 5-day trial and click on that. Then scroll down to where it says start free trial and click on that. And fill out this little form. There's just 4 little lines you got to fill out there. Your email, your first name, your last name, and your phone number. Pretty simple to do. Once you do that and you hit the submit button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, you will not get a free trial because we don't know you took the trial until you do that. All right, the spreadsheet. If you're going to read the spreadsheet, you got to go down here and read all the CFTC risk disclosures. Okay, make sure you get all that stuff read down there. Today, the 24th day of February, we made 10 ticks on the euros, 6 ticks on crude, 10 ticks on gold, and 9 ticks on the NQ. That put us at 267.5. I was just noticing. We had exactly the same here, 2 days in a row, and then this was almost the combination of that. That's pretty close. It was off by $5. So 1 tick on the NQ that would just been 2 in a row, and then the combination of them. Anyway, took 26 minutes and 4 opportunities this morning to get to the goal, and we took a total of 9 opportunities this morning. Okay, so on the month now, 25/18/75. That's over 17 days, averaging 148 per day. That's 1 contract, 2 hours per day. If you were to apply an $8 commission to every single trade we took, and you took every single trade exactly as I did, your net profit would be $13.18. With a $5 commission, your net profit would be $17.68.75. Down here now, on the year we're at 62.40. That's over 36 days, averaging 173 per day. 173 per day. Okay, that's where we stand on the year. All right, now let's get into what we actually did or didn't do. All right, this morning, the first opportunity, was that? No, that was even pre-market. So let me take that off. It closed down below the trend line right there. And then it just chopped a little bit. It would have been a break-even trade for me had I taken it, because right here I would have moved my stop to break-even, and it would have come back up and taken me out right there. Had this big move down and break-even there. We picked up 10 on this move right here, and we were break-even right there. Okay, and that was it for us this morning. At the end of the room this morning, there was an opportunity to go long right here on the gold. I missed it, and I hope that, I think Dan saw it. I hope Dan grabbed that and ran with it. And there was another one right here. And that was it this morning. Okay, that was it this morning. So, on the euro, we had a break even there. And over here, we had, on the euro, what did we have? +6 on that one. Okay. We missed an opportunity there and there. And there. Right here. And we took 4 on this one right here. Okay, that put us at plus 10 on the euro. During the break, there was some pretty good activity here. There's one there. One there that didn't put in a higher swing. So you would have waited until over here, and then the cycle was going down too steep. So you had 2 opportunities in there during the break. Okay. And the crude. There was 1 opportunity there. And right here we had crude. We had 6 ticks right there. That is where we got the goal for the day right there. We got that 6 ticks. I know some guys let it ride and got a little more. I just wanted to get the goal at that point. Let's see. There was an opportunity over here that would have been a break even. If you took it, it should have been a break even. And during the break, there was a bounce off the BBC right here that did not put in a lower swing. So 54.04 dropped down to 53.96 for a possible 8-tick gain. Probably would have picked up 4 or 5 in that. Okay, because as price got down here to dynamic support, I would have been locking in profit. Okay, the NQ, nice and active as usual. Excuse me again. Let's see. We had this one right here where we picked up 8 ticks on that one, and this one over here where we picked up 1 tick. There were some other trades in here, but the ES was in and out of the zone all morning, so we didn't do much with it. Okay, there's another shorting opportunity there, and I think that was pretty much it. During the break, ignoring whether the ES was in or out of the zone, you would have had a short right there and a possible momentum long right there for a break even. And that was it during the break. Okay. Now, the ES, as I said, the ES was in and out of the zone all morning, you can see. And really didn't give us any opportunities this morning. Not a thing. So that was it. That was it for the morning. Again, if you can look at the spreadsheet, go down to the bottom, read all the CFTC risk disclosures. Today is the 24th. 10 on the euro, 6 on crude, 10 on gold, and 9 on the NQ. 26 minutes, 4 opportunities, get to $100 a contract, and total of 9 opportunities today. All right, this $100 a contract was the goal for the day, and we just continued trading 5 more times to bump it up another 167.50. Gross on the month, 25.1875. That's over 17 days, averaging 148. This is the net with an $8 commission. This is the net with a $5 commission. If you executed all 150 trades exactly as I did. On the year now, 62.40. That's over 36 days, averaging 173 per day. If you have not taken the free trial with us, go here to the home page at CFRN.net and scroll down to where it says free 5-day trial and click on that, and then to where it says start free trial and click on that. Fill in this little form. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you click that confirmation link, you will be sent all the information you need to get into the free trial next week. Okay? And that's it. With that, let's see. Oh, okay, we have Bert is in the house, Mike Reed is in the house, and Dwayne, you'll have to pull it back over so we can send it back out to fabulous Phoenix, Arizona. Thank you, sir.
Got it.
Okay. And I have to make that phone call I mentioned to you yesterday. And,
okay. Good luck.
Thank you. And I can see your chart.
Alrighty.
All right.
Hey, Mike, how are you?
I agreed. Looks like he's still muted.
Yeah, he can unmute himself.
Okay.
He may not be
There
ready
we
yet.
go.
There
he
you
is.
are.
Hey, Mike.
What's up, man?
Oh, okay. Oh, I don't know. Doing well. How are you doing, Ryan?
Good, good, good.
Good.
So, what's this deal on the Dow? Hasn't happened in 30 years. What's up with that?
Oh, they were talking about the record closes, originally mentioned, but I think this was it, number 11 out of 12 days or something like that. It was one of those numbers, and it hasn't happened since 1987, which was interesting. So I thought it was being mentioned yesterday, and but I think if I remember correctly, it happened in like February, and they didn't top until August. But I know they had this. If I remember correctly, that was the start of that euphoric run, or part of it, in '87. So that's kind of among other things we have up here. For me anyways, it's really been bullish. Of course, all these new highs in a row, but
Yeah, this what I've got here, it says with 10 Dow records in a row, it wouldn't be a surprise if Wall Street's bull caught its breath in the near future. Stocks closed mixed Thursday, but the Dow was the leader in its longest streak of record closes since the first 13 trading days of 1987.
okay.
Traders often wince when 1987 is mentioned, since it is remembered well as the year of the famous October stock market crash. The Dow Thursday was up 34 points at 20,810, while the S&P rose about a point to 2,363, and the NASDAQ fell 25 to 5,835. Now, the fellow writing this article here says, we're due for at least a rest, if not a correction. We're way overbought. I mean, people have been saying we're overbought for, I don't know, how many years now?
Yeah, depends on what they're using.
Yeah.
I use the internals, and they haven't been overbought, with the exception of catching the last little top before we had a decent pullback about a week ago. But they haven't gotten close, except for like I said, a day a couple weeks ago, and then just one day this week, I think it was, or last week, before a decent pullback. So they haven't, internally, the market hasn't gotten quote unquote overbought. At least on the indicators that I have made. So it's, if we can use a price indicator, which I think about, all the canned indicators like RSI, MACD, etc., stochastics, those are all price-based oscillators or price-based indicators, and anything that's price-based is probably at extremes, and has been for a while. So,
well, you know, those types of indicators that you're talking about, the ones that come built in with most platforms, those things can get overbought and stay overbought depending upon the time frame you're looking at for a mighty long time.
Yeah. So that's why I'm not using price-based indicators.
So now, when you talk, Mike, about using internals, without going into too much detail or giving away any proprietary information, some of the listeners might not understand. Well, okay, canned indicator and internals. What's the difference?
Well, can't, like quote unquote canned indicators. Those are the ones you just mentioned that come with almost all trading platforms that are based on price. The ones that I use, they're based on the advanced and declining issues, up and down volume, new highs, new lows, and then also I have some indicators that I use off of the first sentiment gauges off of the VIX. So those are the things that I use rather than just the price. I want to see what's going on kind of underneath the surface of the market. So, if you don't have good participation in an uptrend, it's normally a red flag. And if you don't have good participation on the downside, that's a green flag normally. So, right now, it's kind of a red flag.
Now, is there a difference between, in your world, is there a difference between participation and volume?
Yeah. You want to see good volume into the number of stocks that are advancing on a good day. But the thing is, if you string a number of those together, that's when my indicators begin to get overbought or oversold. When you have 3 to 5 days with very strong or very weak internals, that's when I can get signals. But barring that, a couple days up, a day down, or up days without strong internals, that's keeping these things kind of still in bearish territory, bigger picture. They're not making highs with the indexes.
So again, the difference between volume and participation is
there's a correlation there on some of the indicators. Okay, so I want to see a good volume going into the number of stocks on the upside.
So could it be like you've got 10 guys and they're each buying a lot of stock, as opposed to having 10,000 guys and they're all buying a little bit of stock?
No.
Would that be a way of explaining it? I'm just trying to break it down so that I better understand it too.
It would be like if you had so you had 1,000 stocks that were up and 1,000 stocks that were down.
Mm-hmm.
You'd want to see more than 50% of the volume going into the stocks that are on the upside. Okay. Probably you want to see about 70% or better. But then when you string a number of days like that together in a row, where you have very strong or very weak numbers, that's when the way my indicators are built, depending on which ones come together, then that's when we can get to extremes on my indicators that have a better much better odds of turning points versus those price-based indicators that people use. So I started this back when Dick Diamond first started me with using the internals for my analysis. That's basically what he used his stuff on. His work on also. So.
Now I know we talked about Dick here a while back. Did he pass away, or is he still around?
No, he did pass away.
He did. Okay.
Right. I did get in touch with his son, who's been on the subscriber list for a long time. But yeah, he was getting up there in age.
Mm-hmm.
But he was a
legend. He really was. I mean,
yeah.
Anybody that's been around trading any length of time had at least heard the name Dick Diamond.
Mm-hmm.
And one of the most amazing things was I heard an interview with him, and it was shocking even to me at the time, because I was working with somebody who was, pressing. You always got to be adding more contracts. And the guy doing the interview said, "Hey, so Dick, how many contracts do you trade?" And his answer was 10.
Yeah.
The guy goes, no. I mean, he goes, well, maybe I'm not talking about 10 what? S&P 500 E-mini contracts. What? You're Dick Diamond. You only trade 10 contracts? And his answer, it really stuck with me. He said, when I trade 10 contracts, I'm focused on the trade. And as soon as I go beyond 10 contracts, for whatever reason, my mind is focused on the money and not on the trade. And he said, so I need to stay in a place where I'm focused on the trade. He said, obviously, I can afford to trade more than 10 contracts, but why not trade where I'm comfortable? Because if I trade where I'm comfortable, that's where I'm going to be most successful. And so that was probably a hard learned lesson for him. I mean, he probably did try, as everyone else does, to get into some big numbers. And some people, find comfort and no difficulty in trading the larger numbers. But he recognized who he was and where his success came from, and he was okay with that.
Yeah. This is Mike. Don't ever, ever, ever trade outside of your comfort zone. That's a recipe for disaster.
That's good advice. That's good advice to everyone who's listening right now. Get yourself consistently profitable, and as you grow your account size, certainly it is okay to add contracts, but add them one at a time. If you're at 10, go to 11. Get comfortable with 11. Get as comfortable with 11 as you were with 10. Then you're ready to go to number 12. Well, it'll take me forever to get up to 100. Okay. I wouldn't worry about 100 right now. I wouldn't worry, but I would just stay focused on being consistently profitable where you are right now.
Yeah. I agree, Dwayne. I am. And people like to stack them on right off the bat. Think, let's make a bunch of money here real quick. And, I don't know. Doesn't happen that way. That's where you blow out your account and come back and try it again and whatever. But anyways, I don't know. We all take our lumps to begin with. Just maybe somebody out there might be able to avoid some of the mistakes that we've made. And,
it's Happy Friday, so we'll have a little fun. Tom wants to know, as an intraday trader, Momo is king, right?
Depends on the day.
Like I said, we'll have a little fun. I'll actually ask you the questions that he types in. What I mean is this: during every day there are sell cycles and buy cycles. Agree? I'll let you answer the question however you want to answer it.
I don't know. Well, we have trending days some days, and we have two-sided days some days. It's two-sided days. But today we traded from support up to resistance, and then have chopped in between that range the rest of the morning, pretty much. So today we have a sideways range. I don't know what cycle. We're probably on a buy cycle since we're moving up. We've been buying higher highs and higher lows. So I don't know if that's what he's looking for, but the momentum, momentum moves are some things that I look at for good guidance when we have them, and I'll use those to trade with the momentum move. But for sideways market action, then look to sell the resistance zones and buy the support zones if market action dictates at that area.
So there you go, Tom. Does that answer your question? Tom. No. He said no.
Okay.
Okay.
All right.
Why doesn't
All right.
that answer your question, Tom?
Two-sided action or trading trains the 60 area on top, and this morning we made our low at.
What would you like him to say, Tom? Just say yes.
Yeah.
Because the way you worded your statement was that you've already made up your mind. So no matter what he says, unless he says yes, is not going to sit with you. So I normally don't get into dialogue with Tom because it never ends.
Okay.
I'll tell you how the markets work, Tom. You might want to take notes. Based on whatever time frame you're in, 1 minute, 1 hour, 1 week, daily, weekly, monthly. Go as big as you want. Oh, now we went from no to not true. Oh, okay. So well, okay. Enlighten us. What's not true? Yeah.
I'm all for learning.
We want to. We're eager. We're eager to learn. We sit at the feet of Tom S. Teach us. Teach us what we don't know. You say not true. Please share with us truth. Now, while he's formulating his answer and tippy typing, here's how I see charts. From the smallest time frame to the largest time frame you can imagine. The market is always building legs in one direction or another. Leg, retrace. Leg, retrace. Leg, retrace. Leg, retrace. Until eventually it doesn't put in a higher high or a lower low. So you get a deeper retracement. Now, that deeper retracement can simply be that, a deeper retracement, and then it can continue building legs and retracing, leg and retrace in the same direction, or it can start building legs in the opposite direction, which then turns the deeper retracement into a reversal. And that is the universal law of how, now again, I didn't say thought, I didn't say theory, I said it's the universal law of how markets work.
There you go. Yes. Type in yet?
Yeah, he typed in, okay, let me show you. Okay, show me.
Do it in 3 minutes, Tom.
You got 3 minutes. Mike's got to go.
I'll get this figured out one of these days, Wayne. Can you help me?
How long you been doing this?
35 now.
35 years. Okay.
Yeah.
Well,
I've been trying.
Well,
Just trying.
You know, you're about to get schooled here. It's time to show you.
He's got 2 minutes, Tom. What? It's that pretty
now
much
remember,
that easy.
this started out as an intraday trader. Momo is king. I assume that means momentum. Momo.
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 I don't know.
Okay. All right.
I'm not from the States, so
we're gonna have to look that. We're gonna have to look that up.
yeah.
All right, I won't tie you up any longer, brother. I hope you have a great weekend. Thank you so much for dropping in. And
thanks for having me, Dwayne.
You got any thoughts on the first of next week? What we should be looking for Sunday night when Globex opens?
Oh, well, let's see. If we can close the day over 60, I think we just continue our run a little bit longer, and then early next week look for pullback to begin. I think we're going to get some kind of pullback. At 91 days, when counting from a 1% down down day on the S&Ps. That's another one that hasn't happened in 11 years, and then 11 years before that. So, anyways, someday this year we'll have a 1% down day. That's my prediction for the year.
All right, brother. Have a great weekend. Say hi to Julie and the family.
All
Love
right,
you
man.
guys. And
All right.
as you head out the door, John comes in the door. Welcome to the show, John.
Hello there. How you doing?
Good.
Happy weekend to everybody.
Yeah, happy Friday to you.
So, did you catch Trump's speech this morning?
I caught a little bit of it. He seemed, and that guy is the Energizer Bunny.
Is he ever? I thought he made a nice. I think he rounded off or explained about the press, the fake news being the enemy. That was kind of a smart move, and probably was his intent all along. And I think it sort of certainly changes the picture when that's explained better to people, because it is the enemy of everybody. There's no disputing that. But I thought it was a great speech. The guy is such a talent for, he can be lighthearted and serious at the same time. He's really gifted that way, very accomplished, and I think he's just getting better and better all the time. And he's resolute. He's incredibly determined. This guy is going to do. He's not going to stop. I mean, this guy. He hasn't stopped since he came down that escalator back in August or whenever it was, July, August last year, in 15 rather. He hasn't. He's been going ever since, and people they don't give him any credit for that. But and let's face it, it's been flawless. Trump made an interesting statement. He said one of the most important things in my life is having a good relationship with my pilot. And after all, if you've got a jet the size of his, your life's in his hands. So having a good pilot is, it's a prerequisite to anything, especially, because things can go wrong in the air any time, any day or night. It's, a lot of this, all these crashes that come out of the blue. Most of them are because of errors, but sometimes they're not. So there's no guarantees when you're airborne. But there's a video out there about a 45-minute video on the Trump plane. It's a very good, very very interesting insight into how he runs his life and how and why his pilots are so important to his success. And when he orders up the plane, he wants it ready to go anywhere, anytime. And these guys, have done a phenomenal job of doing that, given what they had to do last year, and the way he ramped up the campaign in record time is nothing short of astonishing.
Daniel's Trading. This is Leslie.
Hey, Leslie.
Hello, Leslie.
Oh, I'm sorry. Silly me.
Hey, pop back in and talk with us in a minute if you want. Once you take care of your call.
Yeah. By the way, the metals are going great. A couple, 2 or 3 days ago, we put out an alert saying we thought there'd be a $100 move to the upside. We're certainly well into it. It's not exactly a runaway move, and there may be some pullback before we go higher even. But the fact that they couldn't hold the silver down at 18 going into this silver options exploration is very telling. That's never happened, and hasn't happened in years. So it tells you there's some inner strength in this market that's underlying strength that's potentially going to be unleashed in the very near future. And I would say taking out today's highs on the silver will be look, the last night or going out yesterday, the dust had a big strong rally going into the close, and the nugget sold off, and that didn't stop the metals from opening higher today. we're pretty bullish when this sort of thing happens. The nugget has been somewhat restrained here in the recent, in spite of this up move, which is a little bit of a problem. But if we come in over the weekend, and if we come in higher next week on the gold, one of these days, just like I said a few weeks ago, there's going to be a big up day in the gold and the silver, and there's going to be a big up day in the nugget as we got. There's probably going to be another one, and it's going to come out of nowhere, and then there's a day coming when we're probably going to, maybe even soon, when we probably take out that 1830-40 level on the silver, and next thing you know, we'll be at 19 before you know it. And the gold will be probably up around 60, 70, up into the 70s or 80s. If we get above 1275, the odds of going over 13 are going to increase quite substantially. So, but the fact that we're going, we're taking a fairly slow route higher, building, not running away to the upside, but building strength, has to, I think is good action, and it possibly is a prelude to some sort of sudden upside breakout, some sort of sudden upside breakout move. At least that's the way it looks at the moment. There's a few negatives out there. The palladium's coming off a little bit. That's not such a good sign. The copper has been knocked down quite a bit off the highs, which conflicts a little bit with the market. By the way, I think we're in the biggest winning streak in 30 years in the Dow, and I think we either equaled or eclipsed the all-time record for Dow closes in a row, 15 Dow closes in a row.
Yeah, Mike and I were just talking about that. I think I still have the numbers right here in front of me. Hang on one second.
Remember what I said back in, I think even before the end of the year. Remember when the British market went up 14 days straight, 14 or 15 days straight, and I said there's a lot more to come.
Mm-hmm.
I think the case is proven, right? Here's the point: if when you get a 15-day winning streak in the Dow, there's a lot more to come. We may get a pullback like we're having today. Somebody downgraded Nvidia, and it got flopped for the last couple of days. But it got a bit overdone, and there's a fellow who was short. And he covered his short this morning at 96, and it looks like it's back over 100. So the really smart money, when you see a stock that's acted this strong, when it gets knocked down 10 or 15%, it gets picked up pretty quickly, and that appears to be what's happening today. There might be a little bit more backing and filling, but I would be inclined to be still buying dips in Nvidia.
Here's those
AMD.
Go ahead.
And AMD is very, very strong. Hardly pulled back at all, which I think is a pretty good sign. Maxim, which is one of our takeover target type stocks, it's had a massive gap up, and it has been just stalled out. But I think you've got to watch for another upside breakout in Maxim, and in all honesty, Maxim could potentially be another Nvidia, as could AMD for that matter. Maxim, look at the structure on Maxim. It looks very, very bullish on a quarterly or a monthly chart, and it's going to cover a kind of step ladder approach. And generally, when you see that, they tend to have upside surges. So either this company is going to get bought out, or it's going to go higher on its own merits. By the looks of it. So,
what's the symbol for Max? What's the symbol for Maxim?
MXIM.
MXIM.
Yeah, great action over here. You must be knocking them dead again on the gold, right? With your gold.
Yeah, we had a huge huge move in gold. Here's Maxim. Where'd it go? Maxim. Now. There was something I wanted to look at, something that you just mentioned.
AMD?
No,
AMD?
no. Well, actually, what we can do is we can put that on candles. So this thing has been pretty steady for, what sort of a time frame am I on here? This is just the last 30 days, 1 month. Let's go back a year, and okay, pretty steady climb. And then I wanted to compare it to NVIDIA's NVDA.
Mm-hmm.
Yeah, I just want to see what these look like. Let me try that. I need to get used to these tools. A lot of information here. That thing you were talking about a moment ago on the Dow.
Yeah.
Yeah. What it was, it's popped up yesterday. They were talking about it. With 10 Dow records in a row, it wouldn't be a surprise if Wall Street's bull caught its breath in the near future. It could be today. Stocks closed mixed yesterday, but the Dow was the leader in its longest streak of record closes since the first 13 trading days of 1987. Most traders remember 1987 as the year of the famous October stock market crash.
But they remember what I've been saying on this show before all this became known. How I expected the start of 2017 to be very similar to '87, with the first 5 days of the year being up in the Nasdaq, and generally strong. And we talked about rallying into the end of January and possibly rallying in February as well. And now with this January-February phenomenon, the odds of March being a very strong month, probably especially after this little pullback here, just probably went up quite a few notches. So you heard it here first. You definitely heard it here a month or two ago before that. 2 months ago before all this happened. And by the way, it's 10 record closes, but it's actually 15 up closes. Because we had 5 up closes before it hit a new record. There's only one other time in history that we've done that. That was in 1890 something.
So, this is all being used as ammunition to point to, the market's quote unquote overbought, and that we should anticipate a rest, if not a full-on pullback or retracement. But I think you lean more to the point that it can just continue to climb, don't you? What are your thoughts? John? We lost John. All right, I guess he dropped off the map. All right, let's move on. Google and Uber are in a lawsuit over their autonomous car driving ability. Now, in the beginning, Google and Uber started off as friends, then became competitors, and are now adversaries in a bitter legal fight to control the future of transportation. In an explosive lawsuit filed Thursday, the Google self-driving car group, now known as Waymo, it's no stranger than Google, Waymo, accused Uber of using stolen technology to advance its own autonomous car development. The suit filed in the U.S. District Court in San Francisco claims that a team of ex-Google engineers stole the company's design for the LiDAR laser sensor that allows self-driving cars to map the environment around them. Misappropriating this technology is akin to stealing a secret recipe from a beverage company. Now, this was written by Waymo in a blog post announcing the suit, which names both Uber and Otto, a startup Uber acquired, as defendants. Otto and Uber have taken Waymo's intellectual property so that they could avoid incurring the risk, time, and expense of independently developing their own technology. The 28-page lawsuit says ultimately this calculated theft reportedly netted Otto employees over $500 million and allowed Uber to revive a stalled program, all at Waymo's expense. Man, the attorneys are going to make a fortune on this. The legal complaint marks the latest escalation in the increasingly antagonistic relationship between the two tech giants and reflects the big stakes involved in self-driving car technology, which threatens to spend the $70 billion U.S. automotive industry. We take the allegations made against Otto and Uber employees seriously, and we will review this matter carefully. That's from Uber. Now, at the center of the suit is a suspicious email. I don't think the Russians had anything to do with this, although the man at the center of it is named Anthony Lewandowski. That's not Russian. One of the original members of the team that worked on Google's self... Is that you, John? John. Yeah. I guess you fell out. Okay. At the center of the suit is Anthony Lewandowski, one of the original members of the team that worked on Google's self-driving car project. In January 2016, Lewandowski left Google after 9 years to found Otto, a startup focused on autonomous trucks. 6 months later, Uber acquired Otto in a deal valued at $680 million. How would you feel being out on the freeway? There's this multi-ton semi bearing down on you from behind, and there's nobody home, no driver. They say that this autonomous driving technology is actually better suited to the trucking industry than the automotive industry, although it'll find its way into both places, and it's going to be a strange, brave new world. It'll be a strange new world, and you'll have to be brave to participate in it, but it's coming to your town sooner than later, apparently. It's already in some towns. Now, here's the deal. Lewandowski, one of the original members of the team that worked on Google's self-driving car project in January 2016, left Google after 9 years to found Otto. This startup was focused on trucks. 6 months later, Uber acquired Otto in a deal valued at $680 million, which, as we all know in Silicon Valley today, is just chump change. John, is that you? Nope. All right. Waymo alleges that Lewandowski downloaded over 14,000 highly confidential and proprietary design files for Waymo's various hardware systems, including designs of Waymo's LiDAR and circuit board 6 weeks before resigning from Google. Lewandowski installed specialized software on his company laptop to gain access to Waymo's design server. Waymo alleges in the suit he then downloaded 9.7 gigabits of highly confidential files and trade secrets that included blueprints, design files, and testing documents. Waymo said in the suit that it had learned of the theft after it was inadvertently copied on an email that included machine drawings of what appeared to be Uber's LiDAR circuit board that bears a striking resemblance to Waymo's designs. You know, do I need to tell you, be really careful with CC and BCC when sending an email and the infamous reply all. Oh man, that's got so many people in so much hot water. Sometimes it's just better to type the email twice. It's just safer. Waymo said in the suit that it had learned of the theft when it got the email, which was inadvertently carbon copied to them. That's more like karma copied. Waymo also claims that former employees now working at Uber and Otto downloaded additional highly confidential information related to its LiDAR system, including supplier lists, manufacturing details, and statements of work with highly technical information. Pretty much, he just stole the whole doggone thing. Now, at least that's what they're accusing. We're not accusing him of anything, but it sounds pretty suspicious. Now, this is what the car with the, up here you got a forward-facing camera, 3 LiDAR systems. You got your radar sensor on the side here, and then you got your self-driving sensor. Now, again, they've become... John, is that you?
Hello?
Yeah,
Hi.
is that you?
That. Yeah. Sorry.
Oh, you okay?
Yeah, no, thanks. I had a few things happen.
I didn't even know you were leaving. Okay.
Yeah.
All right, go ahead.
Okay. So, just going back to the gold. Well, we were talking about the Dow and the records. Yeah, this is the biggest records since the 1890s or some time like that. I was looking at it yesterday, and it's really a very interesting phenomenon because there's been, there's only been 14 occasions where the Dow has gone up about 11 times in a row, 10 or 11 days in a row, and then as you go higher, it goes down very rapidly. Like I think 13 is there's probably only 2 or 3 times it's been 13 times in a row. Twice at 14, I think, and once at 15. So 15 in a row is it's a once in a century occurrence. That would be a good way to put it. In fact, it's in more than a century now. So that's a staggering statistic in of itself. And the fact that we're on the biggest winning streak in 30 years. And on that winning streak, we've just had another winning streak on top of it. That's absolutely never happened before. That is totally unique in the entire 200-year history of the market, which which speaks volumes. Speaks volumes.
Yeah.
Did you get
yeah.
that?
Yeah, it does.
Okay.
I agree.
Sorry.
Yeah.
Yeah. So it's interesting that with the end of the month coming into play, there's more than. Remember, we got to watch. Let me just pull the calendar up here real quick. We've got to Monday and Tuesday. Just one sec. Sorry. Hi. Hello.
Hey,
I'm back.
right here.
So yeah. So look at the. I'm just looking at you. Have you got the gold chart up right now? You do, right?
I sure do.
Yeah. I wouldn't be too fooled by that little pullback we had. If we start rallying into the close here, that would be very positive. And because look, we're closing on pretty much the high of the week after a pretty phenomenal week in gold. It has to bode well for next week and going into the end of the month. And I think it sets us up for a very good March.
Yeah. John, I think you got something happening to your phone. You think, David, it's conspiracy? I don't think so. Well, anything's possible. So, Tom, you sent me your email address and your phone number. Let me look at my email and see if you sent me some charts. You were going to send me some charts. Did you send them yet? Because I don't see them. I could be missing them. I'll be happy to show them if you send them, but you got to send them to me first. support@cfrn.net. So are you going to send them, Tom? Yes, no? Okay. All right. Well, if they show up in my inbox, I'll be happy to show them for you. Okay. So the bottom line, they started out as friends, Google and Uber. Google invested in Uber. Now they're suing each other, or Google's suing Uber. Uber has become one of the most valuable private technology companies with a valuation of nearly $70 billion. It has faced numerous challenges in its quest to build self-driving cars, notably in December when San Francisco shut down trials of the vehicles in the city because Uber had failed to obtain the proper permits. You'd think when you got a $70 billion company, you could just take one person and go, you're in charge of permits. Make sure we have all our permits. But I don't know. With all that money, you probably get busy, and there's probably a lot of, party going on. Uber recently began testing the cars in Arizona instead. Take that, San Francisco. We don't have permits here. We don't have to wear helmets when we ride our motorcycle. We can carry a sidearm. And we don't need no stinking permits for autonomous vehicles. We welcome you, Uber, with open arms. That should create a lot of jobs, I would think. No driving jobs, but it should create quite a few jobs for the people of Arizona. I don't know what part of Arizona they're going to. I don't know if they're headed to Phoenix or Tucson. There's a lot of wide open space here, and is it a lot cheaper than San Francisco real estate. So their $70 billion will go an awful lot further here in Phoenix. All you high-tech companies, if you're looking to make a move, this is a great place. Now, we talked about Kim Jong-nam and Kim Jong-un and the mysterious death of the somewhat odd-looking brother. Well, okay. I'm referring to the one on the left. XV, or make that VX, nerve agent, a chemical the United Nations classifies as a weapon of mass destruction, was used to kill the estranged half-brother of North Korean leader Kim Jong-un in a bizarre murder in Malaysia last week. Kim Jong-nam was killed February 13th, shortly after being assaulted at the airport in the Malaysian capital, Kuala Lumpur, by two women who wiped the chemical on his face as he prepared to board a flight to the Chinese territory of Macau. South Korean and U.S. officials have said they believe North Korean agents assassinated Kim Jong-nam. He had been living with his family in Macau under Beijing's protection and had spoken out against the North Korean regime. Oh, boy, you don't do that, especially if you're a North Korean. The Malaysian police were investigating whether the VX, which is believed to be the most toxic known nerve agent and is banned globally except for research, was brought into the country or made there. If the amount of the chemical brought in was small, it would be difficult for us to detect, according to the police chief. The two female suspects, one Vietnamese and the other Indonesian, are in police detention, along with a North Korean man. 7 other North Koreans are wanted in connection with the case, including a diplomat at the embassy in Kuala Lumpur. Malaysia has repeatedly urged the victim's family to come forward to help with the inquiry, while North Korea has demanded the body be handed over to its embassy directly, sparking tension between the two usually friendly countries. Yeah, they don't want that body embalmed. That's what, or not embalmed, but they don't want an autopsy. Malaysia's chemical weapons analysis found traces of XV or swabs taken from the eye and face of the victim. Other exhibits are under analysis. The police have said the two women were paid to carry out the assault and had been told to wash their hands before fleeing from the airport. If this is the most toxic nerve agent known to man, I don't know if a little Purell is going to do the job. They had rehearsed the attack in shopping malls before carrying it out on Kim. Now, I'm quite surprised that this guy is, traveling without some sort of security detail. One of the women had suffered from the effects of the chemical and had been vomiting. Airport camera footage released Monday by the Japanese broadcaster Fuji TV shows the moment Kim Jong-nam was assaulted. In later clips, he is seen asking airport officials for medical help, rubbing his eyes, and stumbling as he entered an airport clinic. Authorities said he complained of dizziness and died on the way to the hospital. Authorities raided an apartment in an upscale Kuala Lumpur suburb on Wednesday in connection with the killing, but no chemicals were found. Half-brother. Fatal in minutes. It's tasteless, it's odorless, and it's outlawed under the Chemical Weapons Convention except for research, medical, or pharmaceutical purposes. It can be manufactured as a liquid, a cream, or I'll have mine in aerosol, please. Experts say it has no commercial use. This is not something you make in a kitchen lab. This is something that is made in a very sophisticated chemical weapons lab. North Korea is believed to have the world's third largest stockpile of chemical weapons. After giddiness and nausea, exposure to VX quickly progresses to convulsions and respiratory failure before death. Can be fatal after 15 minutes. Now, this is the half-brother to the ruling tin-pot dictator currently in charge. So apparently he's making sure that there's no way his brother ever takes the throne. Now, who stands next in line? Boy, I really don't know. Yes. Hello? All right. Well, we'll just let it go. All right. Good word for the day. We could use one. Use one every day. Yesterday, we said, what kind of Christian are you? Some people got up and walked out of the room. No, they didn't really. John 10:10 says, I have come that they may have life abundantly. I have come that they may have life abundantly. Now that's the King James, the New King James Version. Here are some questions you should ask yourself regularly. Remember, the topic here is, what kind of Christian are you? Number one, first question you should ask yourself, am I approachable? Speaking of the Pharisees, Jesus said, they love the place of honor and to be called rabbi. Matthew 23:6-7. In Jesus' day, some rabbis had the idea that true spirituality required you to distance yourself from people. Ironically, the only rabbis the outcast could touch turned out to be God himself. Jesus was the most approachable person they'd ever met. Is that the kind of Christian you want to be? Number 2, am I gracious? John Orthberg writes, as soon as we start to pursue virtue, we begin to wonder why others aren't as virtuous as we are. It reminds us of the reply Homer Simpson's neighbor gave when Homer asked them where they'd been. We went to a Christian camp. We were learning how to be more judgmental. Have you been to that camp? Does a little voice inside you categorize people? This one's needy and dependent, stay away. That one's bright and has much to offer. Try to connect. Why do we constantly find ourselves rating people as though we were in some kind of a contest? And when the rich man shows up at the church, we make sure he has a nice seat on the front row. But when the bedraggled bum with a bit of an odor shows up, we put him on the back pew. But Scripture teaches us completely the opposite. So why do we do that? Because we're human. Okay, we're human, but is that the kind of Christian you want to be? Because that's the kind of Christian that many people are. But now that you've heard this, perhaps you may rethink who you want to be. Because, you know, the stuff I'm reading here, if I met someone with those characteristics, I don't care what religion they call themselves, there'd be nothing there that, see, what we have to do as believers is people have to look at our lives and our actions and our words, our deeds, and they have to see something in us that makes them say, wow, I want what he's got. Now, two people I just described, nobody's going to say, I want what they got. So we have to change who we are so that people will say, I want what he's got. Because then they'll come to you and they'll say, man, there's something about you. I don't know what it is. You're not that tall. You're not that good looking. From what I understand, you're not very rich. You drive a beater. But boy, you got something. I don't know what it is. There's a certain thing about you. I don't want your car. I don't want your bank account. And I don't want your receding hairline. But that thing you've got, I want that. I want it bad. How can I get it? We just opened the door to the Romans Road. Please don't use that. Just sit down and talk to them about the personal relationship you have with Christ. And if they go, who? And you say, Christ, and they go, who? You know you got a lot of work to do, okay? But hopefully you are prepared. Because you've got somebody in front of you who desperately knows that their life is amiss. And they haven't been to Sunday school. I hear background noise. Is that you, John? If it's you, Leslie, we'll talk to you. Okay, I guess it's just background noise. All right. Number 3, and then you're off the hook. Am I real? You ever ask yourself that? You know, there's a very popular school of thought out there now that we are this planet Earth, this universe in which we live, is nothing more than a hologram. I didn't say I believed it. I just said it's a popular school of thought. Something to think about. If you haven't stumbled across it, Google, when you have time, is Earth a hologram? Now, I don't know how many holograms you've ever seen. I remember the first one I ever saw. It was in the late 70s. I was in San Francisco. I was right off Haight-Ashbury. I had not taken LSD that day, and I went into the Museum of Holography. Who knew? I just wandered in, and they had these little boxes that you could look down into. And as I looked down into this little box, there was this body dancing. You know who it reminded me of? Do you remember the dancing baby? Way back in the, probably early 90s. It was one of the first animated gifts that we got courtesy of the internet. It came through AOL or Yahoo or somebody. But it was train wreckish. You couldn't quite take your eyes off of it. The dancing baby. It seemed so alive, yet so, I don't know, creepy. But anyway, that's how this image in a box struck me. Now, I didn't know that because that happened 20 years later before I saw the dancing baby. And I thought, that's like that hologram. But anyway, if you've ever been to San Francisco, there's a good chance you've been to the Museum of Holography and you've actually seen a hologram. Now, they say holograms are in our very near future, right around the corner. How does that work out? I don't know. My brain can only hold so much at one time. Am I real? A little boy in Sunday school knew the kind of answer he was supposed to give. So when the teacher asked, "What's brown, furry, has a bushy tail, and stores up nuts?" he muttered, "I guess the right answer is Jesus, but it sounds like a squirrel to me." Often we try to say spiritual sounding things to impress people when they haven't a clue what we're talking about. So let's be real with ourselves and others. Isn't that the kind of Christian you want to be? You know, you bump into somebody from church at the grocery store. "Oh, hey, how you doing? You having a nice day? Okay, great, blah, blah, see you Sunday," and go your separate ways. But Sunday morning, when you walk into church, they're probably on the hospitality team, and they got the team t-shirt on, and you say the same words, "Hi, how you doing?" And there's this loud explosion. "Highly blessed and favored of God, brother. How are you?" Yeah, I'm okay. And then they look so let down. And I'm sorry, I just can't. I can't do it. I can't go along with it. I'm sorry. I don't want to be that kind of Christian. I don't want to be the kind of Christian that scares off new people because everybody around them is blessed and highly favored of God, and they don't even know what that means. That's called Christianese. I mean, if you must speak it among your own kind, go ahead. But if the kind of Christian that Jesus was, is he just talked to people. Sometimes he broke it down into parables. He made it so simple that everyone could understand it. That it wasn't some great mystery. And I think we need to work more as we ask ourselves that question, what kind of Christian am I? For some of us, the answer is not much. Okay, you can fix that, all right? Figure out what it is that makes you feel that or say that or believe that, and then go to work on it. The good news is you don't have to work on it on your own. Now, imagine you had an old Porsche in your garage. Needed to be restored. You could ask your friend across the street. He's pretty good with turning a wrench. Or there's probably a local Porsche club who, that's their deal. They restore Porsches. Or what if you could choose the man who originally designed and created the Porsche? I don't think he's alive anymore. Possibly he is. But of those three, who would you choose? It's pretty obvious, right? So when we attempt to effect change in ourselves, in our homes, in our lives, in our place of work, we get to go to the Creator, to the Designer, and ask, will you help me? And his answer is, of course I'll help you. I created you. How could I not help you? You are my finest work. No, you got the wrong. No. You may have messed up a few things, but you're still my finest work. And if you truly have a heart and a desire to become the one I created you to be, I will help you day and night. In fact, while you sleep, I'll keep working. And I'll be waiting for you when you wake up. You know, you never have to go to sleep alone or wake up alone. I don't care if you're married, single, widowed. You never have to wake up alone. He's always sitting there on the edge of your bed. Power of the Holy Spirit right there. Angels encamped about you. We as men and women of carnal flesh, we want to just pull the cover back up over our head and pretend it's still only 4 a.m. But it's not. The alarm just let us know what time it is. And there's a group gathered around you, ready to see you through every aspect of your day. Yes, even your morning shower. Don't blush, they've seen it before. When you begin to think like that, you begin to act differently, you begin to speak differently, you begin to treat other people differently. Not because those who are encamped about you are judging you. They're there to help you. But you have to allow them. You have to take their advice. When that small, still voice inside of you speaks to you, you have to obey. It's one thing to hear from God. It's another thing entirely to do what He says. Obedience is far greater than sacrifice. So ask yourself, what kind of Christian do you want to be? And then ask yourself, what kind of Christian are you? And then, the big one, what are you going to do about it? The change is a prayer away. No time to get started like the present. Okay, that's a good word for the day. Tom says, I don't want to send my charts on your public forum. Can I send them to you via your email? Well, Tom, I gave you my email. Father, we pray for Tom. I know he's struggling with something that I don't quite understand, but you do, God, and you're his creator, and you put life in his body, and I know that you can help him. And Lord, forgive me for the times that I poke fun at him, because I don't think he really means any harm. I think he just needs you. He needs a friend. If I can be that friend, God help me to be that friend. In Jesus' name, amen. Okay, gold. This is nice. We bounced right back. Let's take a look at the fibs from this swing low. Yeah, I guess we'll use this. 62% fib retracement. Now we're consolidating here at this 24% retracement. Now what if we do it a different way? Now some of you, most of you I think know how to use that tool, right? Fib tool, you just grab it. Now you either have to measure the entire move or the last leg of the move, okay? So what I'm doing here is I'm measuring the last leg of the move so far. We had a 62% retracement in 1 hour. In other words, from here to here, we gave up 62% of that in an hour. We recovered it in 2 hours. And then we've been just rolling sideways. Okay? Now, those are called Fibonacci retracements. Now, let's do Fibonacci price extensions. I'm going to go from that same swing low to that same swing high. Then you're going to take this guy here, this little medallion, and you're going to drag it down and put it right on that swing low. Right there. See that? From the swing low, swing high, swing low. This tells us where we can anticipate price may go from here. If we can take out, obviously, this area here is 1260, 1261. If we can get above 1261, we've got clear sailing all the way up to 1266. But I would want to probably take profit at 65. Or at least get my stop really, really tight. Because from 61 to 65, well, that's $400 per contract. If you're a 10 contract trader, that's a nice day's work. Okay. Last night, while we're on the gold page, let's take a peek. Okay. Last night the alerts were a little bit late because we had the partners workshop. I tried to get them done before the workshop, but as you can see, we were well into the workshop. And we had such a great workshop last night. I mean, it was a full 2 hours. All the emailed in questions were answered. I mean, it was awesome. And we forgot to record it. See, the normal way it happens is I start the class. I hit the start button, and then Michael hits the record button. But right as we were getting ready to go live, I had an important phone call I had to take, and so I said, hey, can you go ahead and start this up? And he said yes. And so he was used to only pushing one button at the start, and so he pushed the start button, didn't push the record button. And we're approaching workshop number 300. We do one every week, and it's only a couple weeks away. Now it's one more week away, I guess, since we didn't get that one recorded. But and I told so many people yesterday that I talked to off and on throughout the day, please come tonight. If there's any way possible, we don't think we're punishing you because you didn't come, because I know life happens and other things are going on, and you can't always, 9 p.m. Eastern is not always a convenient time for you. But the reason I like you to be there in person is not just so that you can ask a question, because you can ask a question via email and we'll answer it. And we did answer all those questions last night. We just didn't record it. But you see, when you ask a question live in real time and we give you an answer, then that spurs dialogue. Then we begin to talk about the subject, whatever it is. And so if you're a partner, if you can be there, by all means, it is in your best interest. Because the question you have could spark a question in someone else. And you find that you learn more from the question he asked than the question you ask, because he's been around a little bit longer and he sees a little bit further, and that's community. Okay? So, I understand, can't always be there, life happens, but if you can, number one, it's better. Number two, if we forget to record it, you still got the good stuff. All right, last night we were looking to buy 1253. Oh, come on. Sometimes it's just like that. See? Push it from that way, pull it from that way, push it again, pull it back. You fight. And then ultimately, because you don't give up, you win. Alright, buy. 12 by 1? 1253. Yeah? Yeah. By 1253. Alright, swing high. 61.20. So, from 53 to 61, that's 8 points. We won't worry about the point 2. $800 per contract available. Okay. Now, once this thing triggered, yeah, you could lay the indicators on it, you could do all kinds of things, or you could just, you just draw a little trend line. And does that leave some on the table? Sure. Everything we do is always going to leave a little on the table because you trail your stop. It's so important that you understand that. Trailing the stop. Now, important prices, important areas are almost always tested. 1253, swing low here, was 1252.90. 1252.90. So what does that mean? It means it got one tick below. $12.53. Swing low, $12.52.90. So it got one tick below the trigger. Off it goes again, and this time it puts in a swing high. Well, in the first 30 minutes, put in a swing high at 58.70. So call it $500 if you traded it. Okay, let's go to the S&P. And let's see what we got. On the S&P, we were looking to be sellers at 23.68. 23.68. That's not possible. That's another typo. Yep, I'm always rushing, doggone it, at the beginning of the... I sent it out, but I already done that one. 23:17 at 10:15 p.m. All right, well that just buy 2368. I'm taking the Evelyn Woodhead Sped Reading course. Sell 2352. I think I need a translator. Sell 2352. Way down here. Sell 2352. You don't get a lot, but we're not greedy. Swing low was 49.50. 49.50. So, all right, 49.50. Yeah. So 2.5 points available per contract. Points available per contract. That's the S&P. I mean, well, we started out the week. Actually, we had a 6 3/4 point trade, and we had a 6 3/4 point trade, and then we had a stop out. Then we had a 2-point trade, and then we had a 2.5 point trade, and it is what it is. I make no excuse for it. It is what it is. All right, on the Dow, we want to sell 20765. We can do that twice. Important prices, important areas are almost always tested. But you knew that. Oh, goodness. All right. 203.765. We put in a swing low here at $6.99. So call it 700. Roll it up a point. 65 points. Sell 20765. Write that up here. Sell 20765. Okay. And so if we take 699 and round it up a point to 700, that makes it a very nice and tidy 65 points. 65 times $20 per point. Okay. Back above, back below. This time swing low was 723. So 55 minus 23, 65 minus 23. $42 points. Never get out at the exact swing high or exact swing low. Why? Because we trail our stop. So that one there was 42. I'm going to guess that this one here was about 40. So there was plenty to be had. This one didn't quite make it back above the trigger. So that's it for the Dow. Bonds, what do we got? Bonds got up and got out of bed this morning. Okay, on the bonds, we wanted to buy 152.12, which we did in a most handsome fashion. Boy. Pretty sure I've sworn I'm going to get a new mouse. 152.12. I could probably, well, 152.22. Now, here's what happens when price goes up 1 point. 152.12 to 153.12. See the horizontal line on the cursor? That's 1 point. That's 32 ticks at 31.25 per point. So had it gone up as far as the red line, horizontal line on the cursor, that would be $1,000 per contract. Didn't travel quite that far. It traveled to 153.08. So with 32 ticks to a point, if we minus 12, that's 20 ticks, yes? And this goes up to 08, so that's 28 ticks. $28 ticks times 31.25 per tick. What does that work out to? $875 per contract. Some brokers will allow you to trade the 30-year bond for as low as $1,000 per contract. Okay. Bonds are volatile. Bonds are not for the beginner. Bonds pay $31.25 per tick, so as long as you're on the right side of the trade and it's ticking away, all is well. But it doesn't take too many ticks against you and you've reached your pain threshold and you're out. You're out of here. Okay? So let the bonds go until a little later in your career when you're ready for it. Okay? Okay. All right. NQ. What a wild ride on the NQ. Unbelievable. All right, NQ, we wanted to sell 53.39. No, we didn't. We wanted to sell 53.20. NQ, sell 53.20. This is what the email looks like that I send out every night to the Concierge Trade Alert clients. So you put in your order, sell 53.20. Sell 53.20. And we get a swing low here. Yeah, there's a pretty good pullback right there. So if you were trailing straight down, that pullback might have taken you out. So let's just go here. I know it could go here, but we'll go here. 53.50. So 19.5 points. $19.5 times $20 per point. Basically, that's $400 per contract. Now, the NASDAQ, remember, you can trade for $500 per contract. The Russell, the NASDAQ, the S&P, and the Dow, the major indices, all have margins, with most brokers, Daniels included, $400 per contract. Okay? And so for $500 in margin, this trade delivered 19.5 times $20 per point. Of course, we don't get out at the exact swing low or the swing high because we trail our stop. So we always leave a little something on the table. I heard background noise. Was that anybody? I guess it wasn't. Okay, fair enough. All right, moving on from the NASDAQ. actually on the NASDAQ. No, we were looking to buy way up at 39, and that did not come into play. Soybeans. Big move yesterday in soybeans, so today we get a consolidation day in soybeans. Now, from 1021 to 1011, points from 1021 down to 1011. It's 10 points, $50 per point, 500. We figured it out yesterday, $550 per contract available. It looks like it might have dropped another tad after we calculated it. Now, last night, soybeans, buyers at 1020? Nope. Sellers at 1006? Nope. And so, the official word on soybeans is last night we got no trigger. Now, with any instrument, from crude to the S&P to the Dow, doesn't matter. Doesn't have to be an ag. If you have a wide range day, okay? Now, remember, we didn't trigger until 1021. But look at the high of the day. Or better yet, look at the high of the session. No, 21st, 22nd. No, that was right. So the high was 31. And it dropped all the way to 10. So that was a $1,000 move over the course of the entire session. All right. We didn't catch the entire move on the alert we sent out. We were only looking to pick up at 1021. So half's better than nothing. I know because I've had both. Gold, we already covered that. What looks strange about that? Nothing, I guess. Would be a buyer at 1253. $9:30 this morning. That's when the market broke. It took us back to the 1253. I drew this trend line earlier just to show you that, if you were trailing this up, I mean, you can trail a stop in any number of ways, and one way is simply to draw a trend line. When you have this kind of an opportunity, you get to close below the trend line, you're out of the trade. So if you get out there instead of here, still had a very nice trade, about 500 bucks. Crude oil. Crude over the week, zone, consolidation, up to the zone, back to the zone. And then it tried the zone again. Couldn't quite make it, 700 bucks. Back down. Then it just stair-stepped down like a slinky. and back up to the zone, back down to the zone, and here is it. All right, we've covered everything. We covered the S&P, which has gone nowhere since we covered it. Dow, same. Bonds, same. NQ, same. Soybeans, they got a little bit of a rally there. Not enough to affect us. There's gold. There's crude. Now, crude may be attempting to make its way back down to this 53.65 path of least resistance. When price comes down through a zone and gets that close and then reverses back up, it's confirming that this is good resistance, and so into the close I would suspect to see prices drift lower in crude. We have no economic news of any kind coming out that's going to affect it in any way. If you're watching on a 30-minute chart, if you look down here at your slingshot, as your slingshot turns red and rolls over, that would be my cue to get short. Last but not least, the Russell. Okay. All right. One last market. Russell. So 1390. Okay. What's that going to be? Russell sell 1390. Oh, 1390. So if you sold 1390, you had a chance to do it again. Over here. Not for a lot. Penny or a pound. Sold 1390. Sell 1390. Okay. So the first drop took us to $79.50. $79.40. I'm sorry, $79.80. So we're going to just roll that up to $13.80. So that's going to be $500. $10 points at $50 a point, $500 per contract available. Okay, then we get back above the trigger and we drop to $13.88, $200, and then another $200 per contract. Okay, 500 per contract from 90 to, I'm rounding this up to 87.90, rounding it up to 88. Oh, I'm sorry, this is the Russell. I keep wanting giving it $100 a point. So this is not 200, this is 100, and this is 100. Capiche? Capiche. Okay. All right. Now, we all been working for the weekend. Really hard, I might add. I'm exhausted. Oh, Tommy, did you ever send me over your charts? Because I do want to see them. I don't want you to think I don't have an interest. Because I do. But if you don't send them, I can't show them. Okay, we'll do it maybe next week. All right. It's the weekend. Law says you got to spend quality time with your family if you want to be a part of this community. That's just the way we roll. All right. But I do thank you so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And, of course, I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.